All right, so penny stocks. Kind of like lottery tickets to the stock market, right?
Yeah, I guess you could say that.
Yeah, high risk,
Right.
high reward, maybe,
Potentially, yeah.
potentially.
Yeah.
Today, we are diving deep into two penny stocks
Okay.
that some folks back in 2025 predicted were going to be
Oh, wow.
huge winners. Okay,
Oh,
those stocks are Taoping Inc.,
okay.
TAOP, and Pixelworks Inc.,
All right.
PXLW. We found this article. It's actually a French article.
Oh, interesting.
Somewhere we've got to translate for it.
Yeah.
And it lays out the case for why you might want to invest in these companies.
Okay.
But before we even get into the specifics of those companies, can you give us like the quick rundown of what makes a penny stock different from any other kind of stock?
Yeah, sure. So penny stocks, essentially, they trade for less than $5 a share.
Okay.
And they're often associated with companies that are, smaller or they're in emerging fields.
Got it.
But that being said, that doesn't automatically make them good or bad investments. I think what really sets them apart is their volatility.
Okay.
So because of their low price, even small changes in buying or selling can cause big swings in their value.
That makes sense.
So they tend to be riskier than, say, blue chip stocks, your big companies.
Okay, so essentially volatility equals a wilder ride is what we're saying.
Yeah, exactly. Exactly. You could get lucky. You could get unlucky.
Yeah, that makes sense.
So this French article, they were pretty optimistic about both Taoping and Pixelworks.
Okay.
Let's start with Taoping Inc., TAOP. So their focus is on digital advertising, cloud computing, and solutions for smart cities. I feel like I'm hearing those words everywhere these days.
Right, yeah.
What makes those areas so potentially lucrative, and how is Taoping trying to make its mark? What are they doing?
Well, I think, those buzzwords that you mentioned, they're really at the heart of some major technological shifts that are happening right now.
Okay.
So as cities grow and become more interconnected, the need for digital solutions just skyrockets.
Yeah. Whether we're talking about managing data, creating efficient infrastructure, even targeting advertising,
Right.
it all relies on technology. And Taoping is trying to, carve out a space for themselves, especially in the Chinese market,
Okay.
by offering a range of solutions. One of the things that they highlight in the article is something called cloud screens.
Cloud screens. What is a cloud screen?
Yeah, so it's actually a pretty cool concept.
Okay.
Imagine like digital billboards, but they're way more sophisticated.
Okay.
They're connected to the internet, and that allows for real-time updates and highly targeted advertising.
Oh, I see.
So instead of just a static ad, you could have content that changes based on like the time of day, the weather, even like who's walking by.
Yeah.
It's all about maximizing engagement and impact.
That's so interesting and so much more high tech than I even pictured in my mind when you said cloud screens.
Yeah.
And the article highlighted some pretty impressive numbers for Taoping. I mean, their revenue jumped 28.4% in 2024, reaching $18.1 million. For a penny stock, that's pretty significant, right?
Yeah, absolutely. For a penny stock, that kind of growth really indicates that they're gaining traction. They're grabbing a bigger slice of the market.
Right.
What I think is really interesting is that the article attributed this growth to a couple key factors. One was the increased sales of those cloud screens we were just talking about, and also a surge in demand for digital advertising in general.
Okay, so they're hitting the right notes.
Yeah, I mean, it seems like they're offering the right products and they have, a pretty good overall strategy.
They even went from a net loss in 2023 to a net profit of $2.6 million in 2024. That's a major turnaround. What does that kind of shift going from red to black tell us about their prospects?
It's definitely a positive sign. I mean, shifting from the red to the black, like that really shows that they're becoming more efficient.
Okay.
And they're managing their costs well, which is a critical step for any company. But especially for a penny stock, trying to demonstrate its viability in the long term.
Yeah, absolutely. So the French article, it highlighted three main reasons to consider investing in Taoping. They're well-positioned in the growing smart cities market. They could benefit from Chinese government support, so think funding and contracts. And then this idea that they might be undervalued right now. What are your thoughts on those points?
Well, I think let's break it down. So the smart cities angle is certainly compelling. I mean, it's a rapidly expanding market. And if Taoping can continue to offer those solutions that cities need, they could be looking at, a massive potential customer base.
Right.
Government support, I mean, that can be a huge advantage,
Right.
especially in China, where it can provide, access to funding and contracts that might not be available otherwise.
Makes sense.
And then as for being undervalued, I mean, that's a little more subjective. It really depends on how investors interpret their financial performance and future potential. There's no guarantee.
Right.
But the pieces are certainly there for a compelling growth story.
Yeah, sounds like it. Okay, so let's switch gears. Let's talk about Pixelworks Incorporated, PXLW. So they're all about high-performance display solutions for things like gaming, streaming, and those next-generation screens, 8K VR. It sounds like they're targeting some really exciting areas.
Absolutely, yeah. I think Pixelworks is really tapping into a major trend here. You think about the rise of AI, the explosion of digital content, the demand for ever more immersive experiences. I mean, all of that relies on incredibly sophisticated display technology. And so Pixelworks is really trying to be the go-to provider for companies that want to offer, the absolute best visual experience, whether it's for gaming, streaming, even professional applications.
And their financials, those seem to be improving as well.
Yeah.
The article mentioned that their gross margin increased to 54.6% in 2024.
Okay.
Up from 44.7% the year before.
Sure.
And they've significantly reduced their net losses. And I know we talked about gross margin earlier, but can you just remind me, what exactly does that mean? And what do these changes suggest about their financial health?
Sure. So gross margin, it's essentially the profit a company makes after deducting the direct costs of producing and selling its goods or services.
Got it.
So a higher gross margin usually means that a company is becoming more efficient, and profitable in its core operations.
Okay.
In Pixelworks' case, this suggests that they're getting better at managing their production costs and pricing their products effectively.
Right.
And, while they haven't actually achieved profitability yet, the fact that they're significantly cutting their losses is a promising sign that they're on the right track.
So the French article really loved Pixelworks for a few key reasons. Growth in gaming and streaming markets is driving demand for their tech. Their financials are looking better, and they're really strategically positioned with cutting-edge technology in a sector that is booming. But of course, no investment is without risks.
Of course, yeah.
What are some of the potential downsides that investors should consider?
That's a great question. So while Pixelworks has a lot going for it, there are definitely some potential risks to consider. The first one I would say is competition.
Okay.
The competition in this space is fierce.
Oh, yeah.
They're going up against some really big players with deep pockets and established reputations.
Right.
Second, technology, as we know, moves incredibly fast.
It does.
So what's considered cutting edge today might be outdated tomorrow.
Yeah.
So Pixelworks needs to constantly be innovating and staying ahead of the curve if they want to maintain a competitive edge. And then lastly, while the gaming and streaming markets are growing rapidly, they are also subject to, economic fluctuations and shifting consumer preferences.
Right.
So investors definitely need to be mindful of those external factors as well.
Okay, so as we wrap up this deep dive into Taoping and Pixelworks, it's important to remember that penny stocks, just by their very nature, are risky.
Yeah, they are.
But as we've seen, they can also offer the potential for substantial rewards if those risks pay off.
Right.
We've given you, hopefully, a nice little starting point for your own research. What else should listeners kind of keep in mind as they explore these companies further?
So here's a thought to ponder. This French article was published back in 2025, right?
Yeah.
I mean, it couldn't have predicted everything that's happened in the world since then.
Right, of course.
We've had global events, economic shifts, even unforeseen technological advancements. All of these things could have impacted these companies in ways we haven't even touched on.
That's true.
So I think it's really crucial for investors to look at the bigger picture.
Okay.
Consider how all of those external forces may have shaped their trajectories.
It's a really excellent point. I mean, the world is constantly changing. That's both exciting, but it's also, like you said, something investors really need to factor in.
All right. Well, this deep dive was just a taste of what Taoping and Pixelworks are all about. There is a whole world of information out there waiting to be discovered.
Oh, yeah.
So keep digging and happy investing, everybody.
Happy invest.